Can someone confirm me? They all can me hear or not? Yeah. Cool. Okay. After a week, I think I'm meeting y'all. So before I start up with the sessions, I will let you all know what I'm gonna do today and tomorrow. Tomorrow also we have the session, right? So today, I'll tell you what's the plan for today and the plan for tomorrow. And I need you all to come on Sunday also. Okay. And also, if a classroom is available on Saturday, come on Saturday. Those 2 days we are going to do past paper questions. Okay. So today and tomorrow, what we have planned for us is we are going to focus on the debriefs of the syllabus, some main areas, like for an example, the pension contributions. It involves in several parts, like loss reliefs. It involves in several parts, capital allowances. It involves in several parts. So today, these are the 3 areas that I'm going to touch. Okay. Then tomorrow I'll be touching something else. Okay, so tomorrow I'll be taking up with some other topics, some topic explainers to you, so that you guys are going to warm up with your sessions and you are going to make sure you have all your background investigations that you have done on tax so far. Okay, so when I say what is background investigation, about your studies. Okay, so your chapters, you would have some summaries, you would have some questions. Sorry for this week, I mean last 2 weeks I could not attend anyone's queries properly. I was attending your queries on and off. I was not well and everything went on like that. Okay, fine. So today in this session, what we are going to critically focus is on, okay, before I go, it's hi, can I please do a topic which covers due dates and time periods regarding tax payments and all. Yes, I'll be doing that. I'll be doing it in tomorrow or next week's session. No worries, I'll be doing that. Today's session, it's not there. Tomorrow's session is there, so it's not going to be. No, section C. Now today what I'm going to give you is more often than not a debrief. So once we cover all those areas, okay, so what we need to know and what we need not to know, I have done some analysis on the questions, what we'll see. Okay, so we'll go through this part today and then we'll try to estimate and position what we are going to do next. So the questions on the weekends I'll be mostly covering directly the questions there. So in the tax marathon session, so we are going to go with a syllabus debrief on certain areas. And for an example, if you take capital allowances, it will play a role in your section C, section A. So it will take all those roles, you know, and sometimes it will be a small computation, sometimes it might not. So we are going to like try to pick some analysis on it and have done some analysis over that, and we will discuss those things. Okay, so to start off with, I'm going to take you all through the pension contributions. I'm going to take you all through what? The pension contributions. So when it comes to pension contributions, hold on. Okay, just give me a moment. Okay. So when it comes to the pension contributions, so we studied 2 types of pension schemes, isn't it? So what are the 2 types of pension schemes? Now you all have to answer. It's not me, right? Occupational pension schemes and personal pension scheme. Okay, so before I go through, some of you all keep on sending me questions. Mock exam is there, no worries, mock exam is there. Okay, so I'll give you the mock exam probably on Sunday or next week. I'll tell the dates. Next week it will be mostly on Monday, Wednesday and Friday. I'll tell you the dates for the next week. Okay, fine. Anyways, so when it comes to the pension schemes, we got 2 types of pension schemes. You know that occupational pension scheme and you know the personal pension schemes. So what do you think about these pension schemes? Now you need to understand how I'm going to be tested on this area. So first I need to understand these pension schemes. So if you take your occupational pension scheme, here the occupational pension scheme is directly deducted from your salary, isn't it? So I go for a work. So my employer is going to give my salary after a deduction of my pension money. Did you understand? So he takes a portion. So from that, he takes a contribution from me and then he gives me the net pay. So the membership is with the employee and the tax relief method is deducted at source as an employment income. Because when you file your income tax return, when you prepare your income tax return, so you will deduct the taxes that you have paid already. So what are the types of taxes that you have paid already? Payee. What is payee? Pay as you earn. So payee is a tax that you have already paid. So these taxes will be relieved. Likewise, this occupational pension scheme is a contribution from your salary by the employer. So the employer will take ownership of it. And then when it comes to the personal pension schemes, now the employer will not manage your contributions. He will give you the 100% money. You are the person who is going to allocate to different pensions contributions. So when you do that, so you got some relief methods. So which part of your pension scheme got relief methods? Now you should know these things. In your exams, don't confuse with these two terms. Occupational pension scheme is different. Personal pension scheme is different. Okay. So clearly when you read your questions, I need you all to pay attention to the question because the judgments that you're going to make is going to differ. Okay. Right. So the membership is vested with the self-employed people. So they will manage their own pension schemes. Then an employee also can opt himself rather than saying, okay, I'm saying that I'm working with a company. I'm saying that you don't manage my contributions. I'll manage my pension contributions. So you can do that. And a non-earner. So if he is having money, he can also contribute to the contributions. Okay. So then the tax relief method. So when you are contributing to the tax by yourself, the government is going to top up 20% to the pension fund. So technically what happens, the technical knowledge, I'll directly give it to you all. It's easy. So sometimes they will say personal pension contribution, a net of 1,000. So they will say net. So what you need to consider to your calculation, you need to consider the gross figure. So how you are going to find your gross figure? That is a top up which is given by the government. So technically you will say this 100 pounds that you have invested, you are investing only 100 pounds, 20% is given by the government. Okay. So they will say this is 80% and what is 100% of this. So when you simplify this, how much you are getting? $1,250. Now see, technically you are investing only 1,000 to your contribution, but it is regarded as 1,250. You got it? Okay. So now this, what it creates you a benefit. Okay. It creates you a benefit in the tax bands. I will tell you how we are going to deal the tax bands in a while. Yes, technically, the gift aid percentage is also 20%, and the contribution percentage is also 20% by the government for your tax syllabus. Good questions. Right. So then, when it comes to the contributions, so who are going to contribute? So if you take your occupational pension schemes, the employee will contribute and the employer also will contribute. Did you understand that? Okay. And also, if you take the personal pension scheme, an individual can contribute, an employer can also contribute, a third party can also contribute. So this is your choice. First of all, you need to understand which scheme you are going to fall into. So that in your exam questions, it will be provided by the exam, what scheme that you are going to deal. So the examiner will tell you, okay, this is a case in terms of occupational pension schemes. This is a case in terms of personal pension schemes. So more often than not, I want to determine the tax consequences of being into the scheme of occupational and being into the scheme of personal pension scheme. First of all, we need to understand an employer contributions are not taxable on employee. So whatever the portion which is provided to your contribution by the employer, by your company, it is not taxable. Okay. Then they're telling us the employer contributions tax deductible against employers trading profits. So when it comes to employers trading profits, now company needs to determine their TTP, right? So when they are determining their TTP, this expense or this contributions that they have made on behalf of the employee is deductible, which means they are also going to get some benefit out of it. You got it? Because their taxable income is going to get reduced. Clear? Makes sense? Then when it comes to employee, the contributions are deducted from the employment income. So whatever the employment income he is going to receive is after paying the contributions, if after contributing to the contributions. Correct? Right. However, on the other side, if you take your personal pension schemes, the contributions are net of 20% of tax. So whatever the contribution you make is we are going to get as 80%. As I told you, after the contribution is made, 20% is given by the government. So it considered as 100%. Okay. So this will, okay. Now this is the main point you need to understand. This is going to give a rise to your tax bands. What is your tax band? You have 3 ladders, right? You up to certain level, up to 37,700. If you are making a taxable income of 37,700, I am going to put you into the brackets of basic rate. And if you increase from there, any pounds that you're increasing up until 125, 140, I will put you into the brackets of higher tax rate payer. Then from there onwards, I will put you into the brackets of additional rate taxpayer. Understood? So now what happens is, now this tax bands is going to be increased. So when the tax authority is going to assess my income, they will not consider my level of income at 37,700 as basic. Rather, this will be pushed more. For an example, let's assume 50,000. Up until 50,000, all my incomes are taxed at 20% because of this benefit that you're going to get. Okay, so let's understand what happens behind this. Now, is it happening with the occupational pension scheme? So when examiner is giving you, now this part of the area will be mostly tested in your OTs. OTs means objective test questions on the first part, section A types. So always look for what pension scheme is given there. Now students can, these are some of the areas that you all can go. So personal pension scheme, you need to keep in your mind your tax bands is going to increase, but occupational pension schemes, it is not going to let your bands to increase. Okay, I got some questions from here. So before I move, so under BPS, we don't deduct it from employment income. Yes, correct. Occupational, you have full tax relief, right? Yes. Okay, fine. Now, when it comes to the tax relief, it can be OPS. OPS means what? Occupational pension scheme, or it can be PPS. What is PPS? Personal pension schemes. Is one tax year is maximum the tax relief that you're going to get, the maximum of £3,600 or 100% of relevant earnings. 100% of relevant earnings or £3,600. That maximum. On considering these two, they're going to give you the maximum as your relief. Okay. So now in this situation, you need to understand what are these relevant earnings are. Okay. So these relevant earnings are going to be your TTP. What is TTP? Taxable trading profits. You can include your employment income. And what is FHL? Furnished holiday lettings. What is FHL? Furnished holiday. So I'm just taking you all through these areas because these are the areas that you should keep in your mind. But I'll give you some examples. You are going to work out through those examples and learn through that as well. Right. So now I'll take you into the bands. So what happens when you are contributing your personal pension contribution to your PPS? So let's assume you are making a contribution of £14,000. How much you are making? £14,000. This £14,000 is contributed by you to the scheme of PPS. What is PPS now? Personal pension scheme. So we have to gross it up. You need to convert it to the gross contribution amount. So how to contribute or how to consider it to the gross contribution amount? The 14,000 is what you are considered to be the 18%. Unless, now be very careful. In some exam questions, they will directly give you this gross. If they are giving you the gross, they will mention within the brackets. If not, by default, it is a net figure. What pension scheme is this? Occupational or personal pension scheme? Personal pension scheme. So you need to convert this figure to 100%. You need to convert this figure to 100%. So if you want to consider this figure to 100%, so which means it is crossed up. It is gross figure. So this figure is what we call as net. This figure is what we call as gross. So be careful in the exams, but sometimes examiner can give you this. So then you don't want to do this working. If he gives you the net, then you need to do this working. So how this working happens? 14,000 is net. Now this is 80%, but what is gross? 100%. That is how you need to get. You need to get 17,500. Are you getting 17,500? So you should get 17,500. Okay. So now let us put ourselves into different positions and see how we are going to treat this position. So they are giving some examples. Now these are some examples: situation 1, situation 2, and situation 3. So I'll take those as situations. Okay. So when it comes to these situations, taxable income from employment is £12,000. So technically, what type of a taxpayer are you? You are a basic rate taxpayer. So you are a basic rate taxpayer. So you will be falling into the taxation category of 20%, correct? So now what happens at this point? Now you need to understand this 14,000 is treated as net of 80%. You know that, the reason. And then the government is going to add another 20% onto you, that is 3,500. So which means technically your pension fund is increased up to 17,500. You got it? So this 20% relief is given to you. How this 20% relief is given as, for an instance, now what happens is from this 12,000, your tax bands will be increased by 17,500. So which means how much is that? 29,500. So still you're falling into the category of 37,700 because your income is not anyways not going to increase beyond that. The lowest tax rate percentage is 20%. You are making an income of 12,000 even after contributing 17,500. You got it? So still you're falling into the category of 20%. So you're getting the 100% relief there itself. Okay. So here technically the tax bands will also be increased from 37,700. That's what I'm going to say. But from 37,700 plus 17,500 is the limit. So until that level, you can increase your income to be taxed at 20%. You got what I'm trying to say? So when you're making an income of 52,000, so now your income is increasing. Now your income is increasing. So when you're making an income of 52,000, you are being considered as a higher rate taxpayer. Okay. So now you will get 40% relief, which is given as how we are going to get the 40% relief. Why 40% relief? Because higher rate taxpayers needs to pay 40%. So this 20% relief as per basic rate taxpayer you need to pay, you will get that as usual up to 37,700. Then plus a 20% relief will be extending the basic rate band to 55,200. How it is extending? By adding 17,500. So if you add 17,500, so which means up until your income, taxable income is 55,200, you are going to be taxed at 20%. Did you understand that? So technically you should have been paid after 37,700. You should have been paid at 40%. You got it? So let me show some figures that other than you will understand that. So up to 37,700, you need to pay at 20%. So anything beyond this point, you need to pay at 40%, correct? So now as a result, you are contributing to your PPS. This situation is extended up until 55,200. Up until 55,200, you are going to pay only 20%. Your taxable income here is only 52,000. So this entire 52,000 will capture only 20% of the taxes. So you are getting a relief of 20%. Getting a relief of 20%. Otherwise, after 37,700, you should have been paid 40%. So the relief that you are going to enjoy as a result of your personal pension contribution is going to be at that extra 20%. Okay, the extension of that. Likewise, if you are moving into a taxable income of 162,000, so you will be considered as an additional rate taxpayer. You are an additional rate taxpayer. So how you will be given the relief? So you get 45%. So here you are going to get the relief at a basic rate band, higher rate band, and the additional rate band. All the bands will be increased. So what they are trying to say is at this position from 37,700, you will be increased by 17,500. So which is 55,200. Up to this level, you will be taxed at 20%. Correct? Then you got 125, 140. That will be increased by 17,500. So whatever the figure that you are going to get will be taxed at 40% from there onwards. Then from there up onwards, it's going to be at higher percentage. So that bands will also be increased. So that is what 142, 640 is what they're trying to mean there. So how the relief is going to get at this position is as a result of the extension, the amount that is supposed to be taxed at a higher rate will be reduced. You got it what I'm trying to say? So I'm saying that when your income level is up to 37,700, that is the limit. It will be taxed at 20%. But if you are getting a position where your income level up to 60,000 is taxed at 20%, means you are getting a 20% relief from 37,700 up to 60,000. So that is how the relief is given. So you need to understand that technique and that method. Okay, fine. So just an introduction stage at your level, and the allowances for your period. Okay, this will be given into your exams. So the allowances will be provided to you in the exams. So the annual allowances for the period 21, 22 and 23 is 40,000. 23, 24 and 24, 25 it is 60,000. Then the minimum allowance is 10,000 and the maximum income limit is 260,000. After 260,000, what happens? You got a tapered allowance. Your income will be, now you know personal allowance, right? What's the personal allowance that we are receiving? 12,570. After 100,000, what happens to that 12,570? If it is reduced by half. So after 100,000 up to 125, 140, it is reduced by half, which means it is restricting the allowances that you have. Likewise, for the pensions, for the pension schemes, when your pension contribution is more than 260,000, it is going to taper your allowance. Okay, right. So this will be provided to you in the exam. Okay, this part will be in your fact sheet, so you should know that. Then adjusted income. So when it comes to adjusted income, we are going to see three things. You have to determine your net income. Then you have to determine your OPS. What is OPS? Occupational pension schemes contributions. Plus you need to consider employers' contributions. So this is how your adjusted income will be determined. So that is the determination of your adjusted income in terms of pension contributions. Okay. So this tax reliefs, going with this tax reliefs. So when it comes to this tax relief, now 3,600 is the maximum relief that you will get. Okay. However, it needs to be considered between your 100% of your relevant earnings. So what are the relevant earnings? What are the relevant earnings? Now don't forget this. In examiner can give you this and not the third. Sometimes in the question he can give you the third one and the first one or the second one. Sometimes only one. So relevant earnings is going to be your TTP, taxable trading profits, your employment income and your furnished holiday lettings income. These are the incomes which is called as your relevant earnings in terms of pensions. Important, right? Very important. So this is where we can go wrong. So you need to understand that part. Okay, coming back. So now what happens at this point? The excess amounts are not permitted to get relief in first place. So whatever the excess amount that you're having beyond this is not going to get the relief. And also this 60,000 annual allowance. So when it comes to this 60,000 annual allowance, this is the excess relief that will be clawed back by adding a tax charge at the end of the income tax computation at individual's marginal rate of non-saving. So what they're trying to say is this annual allowances is determined when you are submitting your income tax return. So they will say how much of allowance? Oh no, you might have made contributions. I have made contribution of 80,000. If I have made contributions of 80,000, so my maximum annual allowance is going to capture only 60,000. So that 60,000 will be relieved from the taxes. The rest 20,000 will be charged for taxes. It will be counted for taxes. However, there is another thing that you need to know. You can carry forward your unused what? Annual allowances. Remember, we did these questions. I'm just bringing you the facts, what you need to know. Okay, so you need to think, okay, for how long I can bring down the unused allowances. Okay, right. So that technically the examiner will be giving to you. However, before that, I want you all to determine the income tax liability for June for the tax year 24-25. Okay, so I'll give you 2 minutes. Can you tell me what is the amount of tax liability you need to pay here? Start calculating, everyone. Yes, Amjad, it will be 20,000. Let's check Daniel. I'll discuss with everyone. Okay, I'm getting some answers. Tomorrow, let's do some income tax questions, section C types, like the bigger one. So I need everyone to bring your laptop. So we'll use the Excel sheets there and the spreadsheets. Tomorrow also bring it, okay? We're highlighting certain topics and then we'll move into that. Today we'll focus on the pension contributions, the loss reliefs for individuals and companies, and then we'll be focusing on capital gains. Okay, let's discuss. I'm getting so many answers. What's the answer you got? 18,800. Anyone else? I got so much of answers. 28,000. Now see, now this is where we need to brush up ourselves. I got, let me take from here. 22,800 as an answer. I got 28,060 as another answer. So annual allowance, I haven't seen it before, different from the present. Okay. Okay, we'll read up 100, 35, 32. That is your chapter 2. For your chapter 2, well, 35,032. Now see, so you guys are telling me this is your tax liability. Okay, so let me also think. You might be correct. I need to do the question with you. Jude has his taxable income of £94,000 in the tax year from his employment. So his only contribution is from employment. So they are telling us the taxable income. They're giving us a taxable income. A taxable income of how much? 94,000. So they're giving a taxable income of 94,000. So, and then they're telling us he made a gross personal pension contributions of 70,000 pounds. So should I convert this 70,000 into 100%? Should I convert this 70,000 into 100%? No, which is already grossed up. So they are, now you have to focus on these words. It's very important. Sometimes if they have not mentioned this, then you need to. Since they have mentioned it as gross, so you don't want to do anything else. Okay, fine. So now during the year, okay, he does not have any unused. So you don't have any unused allowances in the previous month. Okay, you could not bring down any allowances from the previous month, and you will have only the current year's annual allowance of 60,000, which is available to this year, right? So this is your taxable income. I need to understand how much taxes that you need to pay on this income. So technically, you know that your basic rate tax band, correct? What is your basic rate tax band? Which is 37,700. Up until this point, we will be paying taxes at 20%. Since this is being contributed to the PPS, personal pension contribution, what happens? Your basic rate band will be increased by 70,000. 70,000. So which means what is the amount of income? 107,700. Up to this level of taxable income, will be taxed at 20%. Now this is something that you need to understand. Okay, this is something that you need to understand. So now still we didn't calculate the income tax liability. Okay, so you need to determine how much of personal pension contribution that you have made, because the annual allowances which is provided to this contribution is only 60,000. So which means my annual allowance charge, I have contributed 70,000. Now these are my understandings. Okay, I'm just drafting my understandings to you. Okay, I have contributed 70,000. My annual allowance is up to 60,000, which means the extra 10,000 that I have contributed needs to be taxed. So that is going to be how much? 20%, because my entire taxable income is 94,000. So which is I'm not crossing the border of 107, 700. I'm within the limits of 107, 700. So this extra 10,000 from the pension needs to be charged at 20%. I need to pay taxes of 2,000. 20% is 2,000, right? 2,000 on that. So this 94,000 worth of taxable income, I need to pay taxes at 20%, correct? So that is how much? 18,800. So technically, I'm having a tax liability. You have that's what they're asking, right? Income tax liability of how much? 20,800. You need to pay how much? 20,800. Did you understand this now? Does it make sense? So, did you understand how to use the annual allowance structure? Now, for an example, let's assume if I have contributed 50,000 to the annual allowance, do I need to pay taxes on the contributions? The annual personal pension contributions, should I pay taxes on that? No. If you are going beyond the limit of 60,000 only, you need to pay. So in this question, there was not any unused allowances, correct? So if you had any previous unused allowances, you can utilize that. For an example, let's assume you have an unused allowance of 15,000, which means I can relieve this 10,000 under that 15,000, correct? Does it make sense? So then I don't want to pay any taxes on the extra amount of contributions that you have paid. I'll tell you the reason why. So practically think. So now, what is pension contributions? You are going to invest your money into pension schemes, which means you are not going to use that money now. That money will be used by the HMRC. They will invest on other businesses, and later with the profits, it will be paid to you. So which means this is kind of a saving. So when you contribute this money to the pension, and if you are, this is a situation where you can avoid taxes. So if you are a good tax accountant, you will understand that. You are trying to avoid taxes. So seeing this loophole, the HMRC have said, stating that, okay, your maximum annual allowances for an individual is 60,000. Beyond this point, if anyone is contributing, means we will charge taxes on the extra. However, if you can carry forward your unused annual allowances and get relieved on those contributions that you're going to make as well. So that is important. So why don't we add 10,000 to, okay, I'm getting some questions. Let me answer those questions as well. First question, so I included 10,000 again. Okay, that's cool. I hope you understood that now. Why don't we add 10,000 to 94,000 as the income tax 20%? I included a 10,000 again. Okay, you can't include that 10,000 again there because that is the annual allowance limit that they're saying. So annual, now you can't add only that 10,000. You need to charge that separately. Yes, exactly. Because now see, if even if you add, okay, even if you add that 10,000, Daniel, then you should have got 94,000 plus 10,000. So which means it is still under 107, 700. So you should be getting a the total amount figure of 10,000 means this is 104,000 into 20%. Still you should arrive at 20,800, correct? Still you should arrive at 20,000, not 22, should be 20,800. Sometimes you might have made a calculation mistake, so be careful. Both the answers, okay. Okay. Got it. I got a question. Both give the same answer, 2,800 means within the 10K is added to the 94K is tax 24. Yes, correct. So can we do an example of a higher handed? Okay. So what about personal allowance? Okay, good question. So now Amjan is asking, so what about the personal allowance? So here the personal allowance that we are not going to think of, okay, because we are going to the shades of income tax. Because to have your personal allowances, you need to get all your income sources from your non-savings income, your savings income, your dividends income. Okay, then you need to get total taxable income from that. From that, if you have any reliefs, you need to relieve it. After relief only, you need to give personal allowance. That personal allowance is given when you are preparing your final income tax rate. This is employment income, one part of your income. You got it? So this is an adjustment which is only based on that. I hope you understood as well. Am I wrong doing the PA calculation here? Am I wrong doing the PA calculation here? It's a good question. At this point, when it comes to individual parts, don't include your PA calculations. When it comes to be comprehensive parts, do it. Okay, but even if you do it, it is not wrong. Okay, it is not wrong. Okay, in the exam question, as I would have got the same question, MCQ, I would have done the PA calculation. On how many years we can carry unused annual allowances is what we are going to see next. Okay. Questions. So, maximum you can spread your arms 3 years. Maximum you can spread your arms how many years? 3 years. So that is what it is given in your allowances thing. From 21-22 tax year, then 22-23 tax year, 23-24 tax year, 3 years. 24-25 is the tax year that you are working. So this annual allowances for each period is given to you. This scheme limit will be given to you, provided to you in the exam. Okay. So for the year 21 and 22, 22 and 23, the allowance is 40,000. The allowance is how much? 40,000. So 23, 24 and 24, 25, the allowance is 60,000. Which means for the last year also you need to consider it as 60,000. Okay. No worries. We have to, tomorrow we'll bring some questions on these areas. That's what I wanted to highlight here. Now see, the next thing what I want to do is you need to be very clear before you do questions on certain areas, you start doing questions from your end. Okay, you do a big question, income tax question, you can do the section C types, all questions, start practicing it. So within this week, we are going to debrief important areas like this. And then the next day, we will be focusing on the exam questions. Then Sunday as well. Saturday, I'll tell you the timing based on the availability of the classroom. Okay, so I'll confirm after the break, Saturday. Then so whatever the observations through your occupational pension scheme or your personal pension scheme, the tax relief amount will be the same, but the mechanism is totally different. So what they're trying to say is whether you opted for an OPS. Now, there are sometimes people who are deducting their occupational pension schemes, the contributions from their occupational pension schemes, might be thinking that I should go to personal pension scheme. You got it? Technically, it is the same. Okay, technically, it is the same relief, but the way you calculate is different. Okay, so no one is going to get, now sometimes examiner can ask you a question, which method is most favorable to a taxpayer? Should he contribute through personal pension schemes, or should he contribute to occupational pension scheme? What's your answer? Both gives the same impact. The way you contribute and calculate is different. Because if you are paying your occupational pension contributions, that will be deducted at the last when you're paying the income tax returns. Here, you need to do some calculations and show the figures on which amount that you're going to pay taxes. So technically, the personal pension scheme contributions will be charged up, will be charged onto these annual allowances and stuff in terms of calculation, exams calculation, because occupational pension scheme is already calculated through your employment. Fine. Then the next thing that you need to understand is the adjusted income figure used for restriction of the annual allowances for pension is different to the adjusted net income figure for restriction of personal allowance, because our personal allowance adjustment is 100,000, correct? So beyond 100,000 only the personal allowance is restricted, but this is pension allowance. So pension allowance restriction limit will be provided you in the fact sheet. Personal allowance also will be provided in the fact sheet. But however, you should know this 100,000 there. So here the maximum limit is how much? 260,000. So in a year, if you are contributing in a year, okay, in a tax year, if you are contributing more than 260,000 to the contribution, means how much you should have earned. See, practically think. So 260,000 pounds. This 260,000 pounds I'm not using, I'm saving. Which means your income is more than that. Correct? So the HMRC is telling if your income is, contributions are reaching a limit of 260,000 and above, from there onwards your restriction applies by law. Which means, for an example, what happens is, same thing. Let's assume I'm giving, if your contribution is 280,000, what is your limit? Your limit is 260,000. So technically up to 260,000 you will get an annual allowance of 60,000. You got it? So the extra amount 200,000 only you need to pay taxes. So your allowances here that you are going to get is 60,000. However, at this point you are reaching the limit. So which means from 260 to 280 there is a difference of 20,000. Half of that is 10,000. So if you are going to contribute 280,000 to the pension scheme, your annual allowance is restricted to 50,000. How did I get this 50,000? 60,000 is the maximum annual allowances. From this 10,000 is restricted. So the maximum allowances I'm going to receive is how much? 50,000. So like your personal allowance. Personal allowance, what happens? Up to 100,000 you will get 12,570. If it is 110,000, 5,000 will be reduced from that 12,570, right? Then your personal allowance for the period is going to be only 6,570. Did you understand? Likewise, the same thing applies. Okay. So we have clearly discussed those principles. I would like you to quickly brush up that theoretical knowledge yet again, so that you get more firm knowledge to answer some questions, because these are the points that we might forget in the exams. Okay, these are the points that we might forget in the exams. Then now this, I think Daniel or Mohammed, I can't remember who, someone threw me this question saying that's a gift aid donations. So the gift aid donation are also the same way it is dealt with. So there also you get this 20% thing. Okay, same way as personal pension contribution, extended bands by gross amount. So if there is the gift aid contribution, you will get that extension of the tax band set again. So don't forget these points. These points are important because when you are calculating some questions, these points will be thrown. So when you're reading the question, make sure you are observing these points. So you need to observe these points. Then give as you earn, that is what we call it as pay as you earn, are dealt in the same way as occupational pension contributions, that is deducted from the employment income. You know that. So from whenever the employer is going to provide you a salary, so he will be automatically deducting that figure and he will contribute on behalf of you, but you will get the net salary. From your net salary, you don't want to contribute it. But if you want to sacrifice more, if you want to contribute more, that is also possible. You got it? Then, now I'll tell you this. Sometimes the examiner will go towards that extent of your calculation. Now, normally we call those things as salary sacrifice. You're sacrificing your salary to your contributions. You're sacrificing your salary to your contributions. So let me explain you that situation. Now, for an example, let's assume my annual allowance is 60,000, but I'm contributing every month 10,000 to the contribution. But the rate that I should have contributed is only 1,000. For an example, which means 9,000 extra from my salary, I'm putting it to the contribution, where I'm putting it to the pension scheme, which means I'm trying to hide taxes on this 9,000. You got what I'm trying to say? So calculate this for a year. Every month, 10,000, 10,000, 10,000 is going to the contribution, which means 120,000 going to the contribution. So which means that this 120,000 I have sacrificed from my salary to my pension fund. However, when you are submitting your income tax return, your annual allowance is only up to 60,000. The rest, the extra money that you're making, should be subjected to tax. For that amount that you have contributed extra, there will be a tax. You know that? Now, that is how the practical situation will be. So that level of investigation won't be tested in your exams, but still it is not, I'm saying that it is not, it is possible. It is possible to throw a question like that. This is where you need to understand your factor. So what's gift aid and how it is different from pay donations? Good question. Gift aid is a donation that you payee is the taxes that you're paying from your salary to the tax authority before you're submitting your income tax returns. Before you submit your income tax returns, you pay some portion of your taxes. That is paying. Gift aid is different. Payee is different. Okay. Cool. So next, I want you all to take through capital allowances. Okay, we'll do a small. Take a piece of paper. I used to do this. Everyone, take a piece of paper. Or behind a page and a supporting sheet or something. Now, we have learned capital allowances, right? We have learned capital allowances in so many places. I need you all to first, now two things you have to do here. The first thing, you need to write down the things that you remember about capital allowances. Whatever you remember. Sometimes you remember that 18%, 6%, special rate, main rate pool. Just whatever that comes into your mind, jot down in the paper. The second thing, I need you to compare between income tax point of view capital allowances, company's point of view capital allowance. Understood? Make sense? Whatever. It can be correct, it can be wrong, it can be less information. I don't mind. So I want you all to first do that. Okay? And then we'll go into this topic. This session will go for time we finish all these things. Don't be hurried. Until you all do this, I'll try to pull out an Excel sheet, okay? I can write. Yes, but you can visit online or physical because I'll be doing it from the premises. Okay. No, it won't be a so short session. It will be uh, kind of 4 hour session. Yeah, it will be 4 hour session. I hope everyone is doing. I need you to pinpoint the facts that you have learned. Just try to recall things, whatever the things that you have. Short life asset, good, very good. Long life asset, private usage, zero emission, grants, FIA, allowances, good, very good. You all need to know all those things. Good, very good. Others, everyone. You need answers from. Now you try to compare between the companies and the individuals because you can confuse this capital allowances part in your exams. When it comes to individuals, how you need to treat, and when it comes to companies, how you need to treat. You got it? Okay. So for individuals, right? Guys, I'll give you a 30 minutes break. So there's a small session for you all from WNS. So it's good for your career opportunities introduced to the corporates. Okay, so online guys, I will send the, okay, I'll check 100. Online guys, I'll send you the link to join and you all can participate. Okay, so after 30 minutes, we'll resume back. They took more time, but it's a good session, wasn't it? Useful for you all? If you're working, it's useful. Okay, fine. So let's continue from where we left. Okay. Now, when it comes to capital allowances, okay, now this is an area where examiner will test you. It will be there on your, it will be there in your section C part or any of section A. So both in section C, in section A part, examiner can throw you these questions. Okay, examiner can throw you these questions. So it is very important for you to understand this capital allowances. And it is not a difficult area, I would say. These are the areas that students need to maximize their marks. So it can be a working, it can be a calculation. So these areas, you need to show the examiners the clear calculation. Then you should remember the points that I have told in the theory classes to mention some notes. If there are any specific situation, you need to mention some notes. So how this capital allowances is coming into play? What is capital allowances? It is the tax depreciation. I told you it's a tax depreciation. You do not consider accounting depreciation into your tax computations. However, it is important for you to determine these capital allowances to understand how much of tax reliefs that you can avoid from these transactions and what are the allowances available for you and what is the taxable amount that you are going to do. Now, I asked you all to jot down whatever the things which comes into your mind. So I got some very good answers. Some of you all have talked about WDA. Some of you all have discussed about FYA, AIA. It's good. So the next thing is, it's not about knowing them. Okay. Where you need to use it. To what assets FYA is applicable for. And then when it comes to capital allowances, you need to clearly differentiate between individuals and companies. So how the companies, okay, when it comes to capital allowances and when it comes to the capital allowances for companies it is adjusted through your TTP, correct? But individuals, you need to separately calculate the capital allowances before you pay your taxable income, you deduct it. Okay, fine. And any MCQ is also possible for you. So these are the areas that examiner is going to come after you. So you can gain some good marks even in the section part. I mean section C part. In the section C part, you might have to do some calculation because capital allowances include some calculations. So you told me if there are private assets, to whom it will impact? It will impact to companies or individuals. Individuals. Now we need to learn such factors. Okay. So first of all, we need to understand who can claim the capital allowances. It is important. Who can claim capital allowances? So who can claim? Individuals can claim, and companies also can claim. So who can claim? Individual taxpayer can claim, as well as companies also can claim. So when it comes to individuals, we are mostly focusing on your sole traders and partnerships. So these are your unincorporated businesses. These are your unincorporated businesses. So now, on which basis that you're going to calculate this capital allowances? On which basis you are going to calculate this capital allowances? When it comes to individuals, by default, it is cash basis only for cars. So by default, it is what? Cash basis you need to calculate only for cars. Now, some of you all have confusion. So what is this cash basis? What is this accrual basis? Simple. Cash basis means you have paid then and there. Got it? Accrual basis means there are some credit transactions to it. Okay. So accrual basis you can choose on all plant and machinery. This is for whom? This is for individuals. So when it comes to individuals, by default, they can use cash basis for cars. That's only for cars, especially only for cars. If you have, you can go with cash basis. If not, for all the other plant and machinery, because the plant and machinery is what going to be depreciated, right? So all the other plant and machineries, you can elect accrual basis. However, when it comes to companies, the private limiteds or the public listed companies, no cash basis. Everything is on accrual basis. Everything is on what? Accrual basis. So you need to determine your capital allowances. For individuals, it will apply. It will apply to companies as well. It will apply to both. Who can claim? Both individuals and companies. So which means in your section C part, you can expect this question to income tax as well as to your corporation tax. So now, first of all, you need to understand to calculate your trading profits. What do you mean by trading profits? Trading profits means your business profits, whatever you trade, because unincorporated businesses means sole traders and partnerships. This is where you are going to determine your capital allowances calculations, right? So for individuals who are using the cash basis, first of all, you need to understand the receipts, including the sale of equipment. Now this is the format, how to calculate it. And if there are any expenses payments, including the purchase of equipment, you can reduce it. And you can reduce the capital allowances on cars and car running cost or any approved mileage allowances to determine your trading profit. So this is the pro forma that you need to know to determine the transaction in terms of cash basis. So this is technically for cars. Only for cars we use by default cash basis, and that is also related only to individuals. So you have to be very careful. So this is for individuals only. Can you use this pro forma for companies? You can't. However, on accrual basis, this is the individuals who are using to accrual basis as well as all the companies. First, they have to determine the net profit from their accounts and add back any disallowable expenses. You know what is disallowable expenses? We run so many expenses which are disallowable, and you need to remove your capital allowances so that you arrive at adjusted profit for accounting period. Adjusted profit for accounting period. This is the profit that you need to consider as your trading income, as your trading profit. So this trading profit will go into your income tax return as your trading profits itself. You know when you're calculating your trading profits, you have several types of incomes, right? It can be employment income, it can be trading income, it can be property income. So you have so much of incomes. Now this capital allowances is a portion of your trading profits. This is hiding inside the trading profits. So what does trading profits and the capital allowances cause us is, Capital allowances is trying to reduce your trading profit, which means it reduces your taxable income. Reduces your taxable income. For an example, let's assume your trading profit is 10,000 and your capital allowances is, let's assume, 2,000. So technically, you are not going to pay taxes at 10,000. Rather, you are going to pay taxes at 8,000. So paying taxes at 8,000 is good or 10,000 is good? 8,000 is good. You got it? Okay. First, really, you need to understand cash basis is only for individuals, not for companies. But when it comes to individuals, the cash basis is only for cars by default. And accrual, they can elect it for all the other plant and machineries. So for companies, it's going to be technically all what? On accrual terms. Fine. Now, before I go into this perform, I'll tell you something. In exams, there is no any specific order here. Now here they have mentioned it as special rate pool first, then the main pool, short life asset, private usage of the car, and how much of allowances that you are claiming. You know this point. So even if you write the main pool first and the special pool second, no, examiner will give you marks. So there is no any hard and fast performance and rules that you need to use in taxation. Okay. However, be very precise. Okay. So when you are calculating your capital allowances for individuals, when you are calculating capital allowances for individuals, the private usage of the car will be considered. But for companies, it will not be considered. I'll show you in a while. Okay. When it comes to individuals, you need to consider the private usage of the car. So only if you have short life asset and private usage of the car, you need to use item by item basis format. I mean this format, because you need to show the car separately, which is used for private purposes, correct? And the short life asset separately. Then whatever the things which goes to the special rate, whatever the things which goes to the special rate pool, the cars who are emitting more than 50 grams. No, you need to bring down all these figures. Now, this is what you need to clock in. Okay. If it is less than 50 grams, it can go to the main pool. Then to which assets those allowances will be given. Now, you need to calculate allowances. When you are determining your allowances, you need to understand when you are going to give your WDA. You know what is WDA? Right. When you need to give your AIA, what is the maximum limit? That is 1 million. So after 1 million, there is no AIA. Then what is FYA? First year allowance. So to which vehicles you give it? Cars who are emitting zero emissions. So all these rulings should sit inside your mind. Okay. This will be tested in your section C. This is a working for you. This is a working for you. You will score for this working. You will score for this working. So which means this is a working that you and I have to clearly present to the examiner. You got it? It is important. So to do this, you need to understand the format. First of all, you need to understand what are your special rate ingredients that you need to include. Okay. And the main pool ingredients. What is short life asset? The definitions. And private usage costs. Okay. First of all, you bring down your balanced brought forward balances. Correct. Now, in some questions, you can have additions as well as disposals. So what do you mean by additions and disposals? Now practically think, when you are working out your company, you can bring new assets to your business. Some assets you can sell, which means dispose. Sometimes nothing would have happened. Only the existing asset will be continuing with you. If the existing asset is continuing with you, it is easy. You need to calculate only WDA. By now you should understand what I'm trying to say. However, if you are bringing in new assets, now you need to think, should I consider this asset to AIA. Do I have any balances left over for AIA? Because AIA, the maximum allowance is up to 1 million. So if I have assets which I have already purchased for 500,000, my AIA's balance is another 500,000 only. So let's assume if I am bringing in more assets this year for worth of another 1 million, which means I can claim only 500,000. So the rest 500,000 I can't claim. That will be subjected for taxes. You got it? I can't claim any allowances from. Then you have to see, do you have purchased any new cars which is emitting zero carbon emission? For those cars, 100% first year allowances can be used. You got it? So you need to understand that. So first of all, there can be some additions. Did you understand what you mean by additions here? You are bringing in new assets. When you are bringing in new assets, you need to understand, does it goes to the special rate pool or the main rate pool? And do you have any AIA to reduce? So you can reduce your AIA. So it can be any short life asset or private usage car asset, or any car with 50 grams will also go into this pools. Now see, special rate will go here, main rate will go here, short life assets and private usage of the car separately, and the car which is emitting 50 grams or less will go to the main pool. More than 50 grams means it will go to the special rate. So then once you get all these balances, if you are disposing anything, dispose it. We'll do an example, okay? But I'm just explaining you the formula. Right. Okay, what is a short life asset? Asset which has a life of 8 years or 50 years. So where in a question SLA was included in the main pool, but later on when disposing, SLA was taxed fully on disposal, which is not favorable. I didn't get your question. Less than 8 years. Okay, it should be 8 years. Don't confuse. No, you are confusing with wasting assets. Okay, fine, good. So now, then you need to determine your WDA. So when it comes to your WDA, the allowance percentage for WDA, if your assets are sitting inside the special rate pool, it is 6%. And if your assets are sitting inside the main pool, it is 18%. Then, if you have long accounting periods, this will be prorated. For an example, if you have 14 months, everything will be prorated. If you have short life assets, then also it will be prorated. Did you understand that? However, FYA will not be prorated. So what are the allowances which is prorated? AIA will be prorated and WDA will be prorated. Can you prorate FYA? You can't. Both companies and individuals, you can't prorate. Okay. So these, I'm just highlighting the things that you need to do. Okay. Then you need to see any additions that you have for FYA and reduce the FYA so that they are not going to claim anything. And you're going to calculate those balances. Okay, fine. So let me quickly go to a question. I'm finding it's difficult to explain about the question too. I will show. Okay, sure. No, it's. So now, this example, it's a good example. I need you all to calculate the capital allowances for 14-month period. How many months? 14 months. Now this kind of a question can be sit inside your section C adjustments or section A adjustments, both individuals and companies. First of all, you need to read this question. Is this capital allowances is for individuals or companies is what you need to decide. What do you need to decide? Individuals or companies, because your answers may be changed. Applications are the same, but answers may be changed. Okay. Then the next thing, you need to prepare your working. You know what is your working, right? You show your short life assets, sorry, your special rate pool, main pool, and if there are any short life assets, and if you have any private usage car, and how much if your capital allowances you have, and can you do this question? So I'll give you around 5 to 10 minutes. I need you to show it, and I'll also do the workings after you are. It's a small example to brush up your workings. Okay, so let's brush up our workings, everyone. Think that you are getting this question for your exams. How you are going to approach? Okay, those who are working from home, I mean, joining the sessions from home, do this calculation in your laptop. Use an Excel. Okay. So when I'm going to present my answer, I'm going to use the Excel sheet. Okay, no worries. Let's see everyone's answer. I'll give you 3 more minutes. Then we'll. But I think it should be the negative trend. Yes, correct. Yes, SBA also may be an inclusion as well. So he's asking the structures and business SBA building allowances. It can be a question. Yeah, it's a good question. It'll be tested. Yeah. No, it won't be for it'll be 2 to 3 hours maximum. So let me read the question with you. Lee prepares accounts for a 14-month accounting period. How many months? 14-month accounting period, which is ending on 31st March each year. So he has the following tax written down value, which is brought forward balances. So these are the brought forward balances. So he's having to the main pool 35,000 worth of balance. One with a private usage of 20%, which is emitting 15 grams. So 15 grams means should it go to main pool or special rate pool? Nowhere it should go. First of all, you need to understand it's a private usage is involved, and this is you're preparing for Lee. So first thing you need to understand, is it for a company or individual? Now this is for an individual, correct? How did I decide it's an individual? By the name. If Lee PLC means it is company. This is not Lee PLC. This is for Lee you are preparing. Cool. So now you need to have a separate column for the car one. Correct? Then during the period he is disposing the car one. So he is selling the car one for 17,000 pounds. Let's see what we need to do there. Then after that he is purchasing new cars, and there is bringing a new car, which is that's also 25% for the private usage. And now he's emitting 16 grams of carbon, which means this should be included under the special rate pool, but still the private usage you need to show it separately. Where this will impact is when you're calculating your WDA to decide whether between 6% or the 18%. So 6 or the 18% only, these grams will be helping us to decide. Okay. Then the zero emission car, you are bringing a new zero emission car. So the private usage by the employee is not considered. Employer is considered in individuals. You need to understand that. So that is 37,000. Okay, cool. And they're asking us to calculate the capital allowance. So shall we do the workings? Okay. So correct me if my workings are incorrect. So first of all, so in your exams, you will get a similar spreadsheet. Okay. So where you need to work out your answers. So I'll try to bring out that example, the practice platform. You know that we have to find the practice platform, log into your study hub, first study hub, your ACCA logins. From there you can go it. I'll try to show it to you tomorrow. So you can choose your exam papers and practice those things. Fine. Cool. First of all, I need to understand. Let me see whether my script. Yeah. So first I need to understand, I'm determining capital allowances for Lee. So I would say Lee's capital allowances for 14 months, right? 14 months to 31st March, because I do change as 31st. Correct. So now my workings, I need to include whatever I have to the main pool. Correct. So to the main pool, I need to say main pool items are there. Then you had private usage of the car. Okay, so car one. correct? Private usage, car 1. And what's the percentage? 20% is used, but 80% for business. So show 80%. So you can say 20% private usage also. So 80% business usage. Whatever the way you show it, no harm. Okay, sometimes I would have used to put 20% private usage. Correct. You need to mention 20% private, 80% business usage. Okay. So whatever the way that you are going to convince the examiner. Then I know that you are bringing down a new car, isn't it? So the new car, the private usage, that is car 2. So that is how much? 75%. 25% your 5%, which means 75% for business usage. Correct. And then how much of allowances I'm going to pay? Allowances that you're going to claim. So to your first label, I'm going to say tax written down value. Isn't it? Tax written down value, which is brought 4. So to the main pool, I had 35,000, correct? So you had 35,000 to the main pool. And to the private usage car, it was 15,000. Okay, cool. Do you all have any additions? Do you all have any additions? At the moment, go and see. Okay. So now you need to determine during the period you are disposing. Okay, during the period you are disposing, 17,000, which is the car that you had, you are disposing for 17,000, correct? Then there is a private usage car. Yes, there is an addition of 42,000, correct? Car 2. Okay. So to the car 2, so there is a car 2, the second car, that is the addition. So I would say addition. So during the addition, you had a car, correct? So there's a car. So car has no AIA, correct? So do you provide AIA for cars? No. So you have to remember that part. So that's how much? That is 42,000. So I will show that it has 42,000. So because car is not going to get any annual allowances. If you have purchased a machinery, then you would have claimed AIA, annual investment allowance. But for cars, you do not have. Correct? Understood up to this point? Fine. So now I'm disposing the asset. Why am I not taking the zero emission car? Because zero emission car is subjected to FYA. Zero emission car is subjected to FYA. Okay. Cars does not get AIA, but cars will be getting WDA and FYA. So zero emission car will be receiving FYA. So I will do that at last. Did you understand that? So how am I approaching to the question? But now you are selling 15,000 worth of car for 17,000. So you are having a balancing charge or a balancing allowance. Your cost is 15,000. You are selling for 17,000. So you have a charge, which means you are making a profit. Profit situation is a charge situation. You got it? You need to remember this. If your cost is 15,000 and if your sales proceeds is 13,000, you have a balancing allowance. You got it? Right. So now let me go back to our calculations. So I would say you are disposing. So I will say disposal. I'm disposing the car for 17,000. Correct? You're disposing the car for 17,000. So which means that you are going to make, so give me a moment. You are going to make a 2,000 as your balancing charge. How much? 2,000 as your balancing charge. So my balancing charge is how much? 2,000. But can you take this entire 2,000? Can you take this entire 2,000? You can't take this entire 2,000. Why? You need to consider only, what, guys? You need to consider only 80% the business usage, because this car was used for both private usage as well as business usage. You can consider only for 80% business usage. So you need to determine only 80% of these transactions, which means since this is a balancing charge, it is a positive figure or a negative figure? It will be a negative figure. Okay, so the 80,000, sorry, 1,600, right? You're going to make 1,600. So which means you get a negative allowance of 1,600. So this is a balancing charge situation. So let me also tell you something. Whenever you are disposing an asset, check whether your cost and the sales. If your cost is more than the sales, you will get a positive figure because it's an allowance, because you can't pay taxes on that. You're already losing something. So when you're losing something, can I charge taxes on that? No. However, if you are making more money, I'm going to reduce your allowances. That's why this, because 15,000 worth of car you are selling for 17,000. So which means that I'm making a balancing charge of, which means more profits of 2,000. By that amount of the business percentage, I will reduce the allowances. Correct? Right. So then what happens? You need to bring down your balances. If that's all you have, so you bring down your balances here. Use it here. So the balances that you have here is 35,000. So I would say that is 35,000. Here it is nil, nothing. So it's going to be a 0 because you have sold it. No? So it is going to be 42,000. Correct? So now I'm going to determine my allowances. What's the allowance that I'm going to give? WDA. So I'm going to give my WDA, written down allowances. Now see the way I'm calculating. So when you are giving your WDA, don't forget certain principles. First of all, you need to understand your pools. So main rate, how much you give? 18%. Special rate you give 6%. Okay. So at this point, I have a main rate pool, which I should give 18%. Correct? However, this 18% needs to be charged at, this 18% is for 12 months. What is for 14 months? So which means, why am I taking that? This is a 14 months period. So this percentage is given, this allowances, technically annually only you give a percentage. No? So this 18% is for 12 months. Then what is for 14 months? You need to determine. So when you're doing your calculation, you need to show. So let me also bring that figure in this way into, say, X. into, you need to show, okay, you need to show 14 divided by 12, correct? 18%, 18% divided by 12 multiplied by 40, because 18% is for 12 months, what is for 14 months. So which means technically when you are determining the allowances here, you got 35,000. This 35,000, 18% you need to take into 18%. So I would say 2.18. So I'll open brackets and 18%. And also you need to say it is multiplied by 14 months and divided by 12 months. Okay. Do you get 7,350? That is your allowance. That is your allowance. Did you understand that? Okay, so that is going to be your allowance here. So I say 7,350 is your allowance. Similarly, you got your private car, which is the private usage car, which is having 75% business use, This car will attract how much of WDA? 18% or 6%? 6%. Why 6%? Because it is emitting more than 50 grams. It is emitting 60 grams of. So which means I need to give 6%. I'm just writing for your reference. So which will divided by 14 by 12. You know the reason why am I dividing it by 14 by 12? Because it's a 14-month end transaction. So which means when you are calculating it, so I would say, so 42,000 multiplied by 6%, correct? Then into 12, sorry, 14 divided by, it's going to be 2,940. Can I take entire 2,940? Can you take entire 2,940? Of this you need to take only you need to take 75%. So what is 75% of that? Okay, 2,940s into 75%. So that is going to be 2,205. Correct? 2,200. Did you understand up to this point? Are we done? No. Now there is another addition for the period. What is that addition? Addition which is having FYA. Because you are bringing down an asset which is emitting zero carbon emission. So zero emission car. For how much you are bringing in? You are bringing in that car for 37,000. 37,000. So which means you are going to give FYA on that. So that is how much FYA we are going to give? 37,000. So that is your allowance for the period as well, correct? That's all. So here you do not have anything else, so it is a nil here, correct? So you are going to determine your tax written down value carried forward balances. So which means from your main pool, so from your main pool you had 35,000, of that the 7,350 is gone, so you have a balance of 27,650. Once you disposed your car one, so you do not have anything, so it is going to be a nil. But to your car two, private usage car, you had 42,000. Of that you have given how much? 2,940 as allowance. So you have 39,060. Then the total allowances that we have, total allowances for the period, I would say this is what we are looking for, isn't it? So this is going to be 1,600 plus 7,350 plus 2,205 plus 37,000, which is 44,950. That should be answer. Understood? Make sense? Now these calculations is not difficult. Each and every steps that you have followed, examiner will give you marks, a 0.5 marks to each and every step and the calculations that you have to. And when you are arriving at your final answer, sometimes let's assume your final total allowance is around 42,000 you got, and you forgot that 2,000 allowance balancing charge, but still your workings are shown, you'll score the marks. So show this working clearly. It's important. It is important. So why didn't you take the new car that day? Because new car is getting an FIA, the zero emission car. So that's why I'm not taking it now. So you need to show your adjustments like this. So clearly take your time there. Don't waste too much of time. Start practicing and understand these factors, what you need to do. Show this. Now see, it's very clear to the examiner. I have shown everything in and out. Okay, I'm not going to go and beautify anything else. I'm going to say this is the allowances that you are enjoying. So from your trading profits, they will reduce the capital allowances. And the adjusted trading profit is what will be taken to your income tax returns. The next step is what? After adjusting this figure will be taken to your income tax return, because this is for an individual. This is for an individual. Make sense? Is that clear? So we do this example. Now for companies. Now when it comes to capital allowances for companies, you do not consider the private usage. You do not consider the cars with private usage. Okay. So apart from that, everything else is the same. You have your special rate pool, you have your main pool, you have your short life assets, and you are going to give the same percentage. The same for special rate, you have 6%, and the written down value, which means the main pool, you have 18%. They are also the same thing. Cars does not get but AIA, but they will receive FIA. The same rulings. Everything is similar, but you do not have car for the private usage. Okay, give me a moment. I got some questions. So basically we use wrong figures, but if the method of the calculation is correct, we are more likely to get marks. Yes, of course, yes, you will be getting marks. And also, what note should be right? Okay, good question. So in addition, if good question, I would say when it comes to the notes that I need to write, I will write to the examiner saying that the new car with zero emission does not claims. So okay, will claim, not does not, will claim FYA. Just I'm giving a note, a reference to it. And also I would say the car which is disposed, okay, will be attracting balancing charge. Some references to the points, okay, so, but don't give too much of detailed information wherever necessary. Okay, correct. So, should we use the workings separately or in the cells? Should we have our workings? Workings, you have to show it in a separate sheet, okay? Which they will show where you need to show your workings. You can calculate your workings then, and your final answer into the other figure. So why do we give FYA after that a WDP? Because FYA means 100% allowances, right? So you show it at the bottom. So that's what I showed you. Even if you can show it in the top as FIA, no harm. There's no any hard and fast rules as this. Ultimately, you show it in the top or you show in the bottom, your final allowances is going to be the same. So that's why I told you at the beginning. It's a performer that is easy. It will make your life easy. Right. The same way you need to determine the capital allowances for companies. The company is also the same thing, but the thing is you don't consider the private usage here. Okay. So can you try an example for the company then? Can you take your time and try do those workings? Okay, so now let's go an example of a company. So a company prepares which company X Limited. Now see in this question, how did I determine that this is as a company? Based on the name. Based on what? The name. So name is X Limited. So if it is X Limited means it's a company. Prepares accounts for 14-month accounting period, which is ending to 31st March, same thing. So they have a main pool balance brought forward of £50,000, which is including a car during the first 12 months. Now see, during the first 12 months, it disposes the car one. So within 12 months, they're disposing the car one for 17,000 and purchases the following new car. So they are purchasing a new car. So the car two, which is for the private usage by the director, 25%, which is emitting carbon of 60 grams. So which is main pool or special rate. Special rate. So during the final 2 months, it purchases the following new car, and that is a zero emission car for 37,000. So they have clearly organized the information and they have given. So let's see how we are going to deal this transaction. Okay, so when it comes to companies, I told you there is no private usage things. So I would say X Limited capital allowances X Limited capital allowances for 14-month period. So in this stage, I have main pool, assets, and then you have special rate assets. So do you use the private usage here? Do you have the private usage here? No. So which means I will go only with special. And then you have your allowances. Correct. So I have a tax written down value. You have a tax written down value. So here I would try to segregate this information because first 12 months only they have given for 12 months period. Why? Because see in this information, so pay attention to the information as well. So in this information, they are clearly telling us 12 months you are disposing a vehicle. So first, because this 50,000 is including this vehicle as well, which means the car one. So after 12 months, there is a rest of the balances which is coming in the next 2 months. So I'm going to take the first 12 months separately and 2 months separately to show my calculations to the examiner. So the 12 months, anyways, the opening balances he had for main pool is how much? 50,000. That is what he had. Did you have any additions? Yes, you had any additions. You had a car. Did you have any AIA? No AIA for car. Always remember, car does not have AIA. So no AIA for car, so it will fall into the special rate pool, correct? Why special rate pool? Because it is emitting more than 50 grams of car. So it will be going to the, so then I know that I'm disposing. There's a disposal. So during this disposal, so 17,000 worth of car is being disposed. So which means technically you are having a balances of 50,000. This is going to be 33,000, and here it's going to be 42,000. So now I'm going to determine my WDA, written down allowances. So this time I'm not going to prorate anything because I'm taking 12 months. So 18%, and you have 6%. So 18% on 33,000. So 33,000 into 18%. Oh, sorry. So 33,000 into 18% is going to be 5,940. Then same thing, 42,000 into 6% is going to be 2,520. So these are the allowances that you can claim: 5,940 and 2,520. What is this? Okay. So then your tax written down value after this allowances, which is carried forwarded, is going to be from 33,000. If you remove 5,940, it's going to be 27,060. Then from 42,000, if you remove 2,520, it will be 39,480. I'm not going to do time apportionment because I'm doing it for the 12 months separately, because the disposal is included within this 12-month period. So after that, for the 2 months, so see, rest of the 2 months, they are clearly saying that. So during the final 2 months, you are purchasing a new car, which is the zero emission car. So I would love to add that as your 2 months. So the rest of the 2 months. So rest of the 2 months, I have a car which is coming in. So what is the car which is coming in? Before you are trying to determine the FYA, yet again you need to calculate WDA, because 14 months, not only for 12 months you have calculated. So I need to calculate the WDA for the next 2 months, which is yet again 18% and 6%. But this time you need to prorate. This 18% is for how many months? This 18% for 12 months, but I need it for 2 months. It's 2 divided by 12. So same thing. 6% is also the same thing. 6% is for 12 months, but I need it for 2 months. So yet again, you need to calculate on this 27,000. You need to calculate 18%. However, this yes. Give me a moment. Formula that is working. Okay. 27,000 into 18%. Then it is multiplied by 2 divided by 12. So you get 811.8. Everyone gets that? Everyone gets that answer? So in the exam, you can make it as 812. No any issue. Okay, you can round it off. So I'll just leave it as it is. So on this 39,000, it will be thousand into 6%. 0.6 multiplied by 2 divided by 12, which is 395. Okay, so the allowances here you are going to get is this much. So allowances from this is you are going to get. Then you have an addition in the next 2 months. So when it comes to this addition, so it is having an FYA addition. So you are bringing down a zero emission car. So which is costed you 37,000. So you got your FYA allowances, first year allowance. So FYA, should it be prorated? No. That's why I need to show it. It is not prorated. So it will be 37,000. So which means technically you're making nothing. But your allowances is how much? 37,000. So finally, you need to get your tax written down value. Is carried forward. So here I would say from 27,000, if you remove 8, from 27,000. If you remove 818 is 26,248.2, and this is going to be 39,000 minus 394.18. It's going to be 39,085.85. So the allowances, so I would say the total allowances. The total allowances that we are going to get is going to be, we need to total this plus this plus this plus this plus this is equals to 46,666. All good? Everyone got the same answer? What happened to this? Okay, fine. Anyways, you got the total answers, right? Everyone got the total allowances? Okay. Fine. Sir, can you show me the previous question answer? Yes. Sir, you didn't multiply because I told you the private usage for companies we do not consider. The private usage for the companies we do not consider. That's why I didn't multiply it by 70%. Okay, for the, yeah, let me okay, I'll show you the answers. So something went wrong with my equation. What is 7 here? Okay, so you need to get the totals of, okay, you need to get the total of 5,940 plus 2,520 plus 812 plus 394 plus 37,000. So get 46,666. Okay, so that is your total allowances. It's going to be your total allowances for the period. Right. However, let me take you. So the next previous answer is this. Take a snip if you want quickly. This for the individual. This is least capital allowances, and this is for the other person, the company. However, going back to the situation, in this question, let me explain again. See, you had a main pool car, 50,000, correct? Then you had 17,000, which is including in this. So I removed it with this happening in the first 12 months, the disposal. That's why I had to do it separately. The private usage by the director, we do not consider. Okay. So since this is emitting 60 grams, I took this car under special rate. And then the zero emission car, here you will get the complete FYA. Correct? You'll get the complete FIA. So that is happening in the final 2 months. So that's why I had to prorate your WDA on the assets. Now, WDA on the assets which is already brought forward, because from this point you have already calculated WDA for 12 months. For then you will be missing for this 2 months. You got it? So what's the reason for splitting? Because there is the disposal. So what's the benefit of electing the item by item basis? It's not benefit of electing item by item basis. Item by item basis is used at individuals when you have short life assets and private usage assets. So in this situation, you don't, for companies, you do not have private usage of assets. But if you have short life asset, you have to. You got it? So that is not the benefit. There is no any benefits here. You have to show it separately. That's a format of your calculation. Okay. Also, why don't we take balancing charge or allowances for disposal? Because we didn't have any balancing charges there. Because that under that 50,000 only, that 17,000 was 17,000, which means technically they did not specify what is the value of the car. So, but it was included in the total pool of the main. So the total balances of the main pool is 50,000. Of that 50,000, you are selling for 17,000, means the balance will be charged for WDA. So I did not want to calculate any balancing allowances or balancing charge. Anyways, so the key points that you need to know. First of all, when you are trying to work out capital allowances, these are the points that you need to take to your exams. These are the points you need to take to your exams. First, read the question carefully and determine, are you going to calculate for an individual or for a company? Individual or for a company? The private usage of assets is only impacting your individual's calculations. You need to remember. Private usage of assets will be only impacting the income tax returns, not your company tax returns. In other terms, I would say. Correct? So use a detailed pro forma. So why they are saying to use a detailed pro forma to compute? So each and every step you will get a score. Each and every step you are going to get a score. Then make sure how long the accounting period is. Is it for 12 months? Is it for 14 months? 12 months means the normal way of it. Then my examples, I took 14 months so that you understand what happens if it is 14 months, what happens if it's 6 months. WDA, see, and AIA will be time apportioned. It will be time apportioned. Whether it is 14 months or 6 months, the FYA is not time apportioned. It is not time apportioned. Then when it comes to the long accounting period, split for companies on leave. So when I did for individuals, I did the entire 14 months together. But for companies, 12 months and for 2 months separately. So it is important. It's an important. So show your workings clearly to the examiner. You are not going to miss out in capital. It's an adjustment which will be tested in your section C part. Okay. For individuals as well as for companies and your section 8. Nowadays we'll see some examinable questions tomorrow or weekends. We can see some exam questions. But at the point, I want you all to know these facts. Make sense? Okay, so let me go through some of your questions. And also, didn't we take the balancing? Okay. Right, so in companies we don't take the private usage but the short life asset. Yes. So for companies, the necessary to split the period. Yes, you need to split the period for companies. It is necessary because it is the record. It's the take home points that I can give. Simple. Keep it very simple. Now this is what you need to do when you're studying. So these ingredients needs to sit inside your mind so that your life will be easy in exams. Okay, I'll ask you some questions. Debriefing about these kind of areas, is it useful or not? Asking a question. Is it useful? Or do you want directly jump into the question and smash it? You can directly jump into the questions, but questions, I want you all to practice, and I know that you all are bringing up doing those questions, but some points that you guys might miss. So this would be a good thing. And also on those tax administration, like income tax administration, VAT administration, companies tax administration, which means which date you need to file, which date you need to pay. I'll do a session on that as well. Next week I'll be doing on that, because I'll do it closer to the exams. Sometimes we might forget, not because those are dates, but important. Okay, you can score good marks there. Okay? Questions will be. So I will be doing a VAT marathon session, inheritance tax marathon session, for companies also a marathon session. These things now, companies and income tax I mostly use together and show some comparisons for that you understand things better. Okay, and you understand the differences. So what I'll do is I'll bring out some examples like this in the marathon sessions. Then weekends will focus more questions. That will do it questions. So that we totally, what happens is when you are going through these kind of sessions, you debrief your understandings, you go with some example questions to brush up your knowledge, and you revise everything. Okay. So today you learn personal pension contributions and occupation contributions and the rulings behind that. And we learned about the capital allowances for both companies and individuals. Clear? So the next point that I need to relieve is the loss reliefs for individuals and companies. An important topic. So even I'm expecting a question to be in your paper on loss relief system, because it wasn't tested the previous batch or the batch before. So it's kind of an expectation for me, from my perspective. A loss relief can be given. A loss relief question, if you are getting it, it's blessed, I'm saying that, because you should know some rules. You should know the carry forward rules. You should know the carry back rules. And for individuals, how these rulings are. If you know those rules, you need to just apply. And also you need to have the knowledge of where your personal allowances are getting wasted in terms of individuals, because companies does not get personal allowances, right? You got it? And how these reliefs needs to be used. I have summarized some important points which we need to take it up. So let's discuss that tomorrow. Okay, on companies loss reliefs and individual loss reliefs. And also I'll bring out some topics tomorrow, so you can kind of brush up those topics as well. Okay, and yeah, this, if possible, I'll try to have a session with you all on Friday for questions. That is only past paper question. I'm not going to debrief any questions. I'm directly going to get you a past paper question, and we both are going to sit and answer.